Good morning everybody, it's Chris here from Serene Education with the 4 Managers Analysis Update for the 19th of April 2011. Just looking at the Euro against US dollar on our CTC strategy template. It's going to call up a daily, and you'll notice that I've already put in these two major support and resistance lines, primarily so you guys can see the trend and you can see the major resistance. We've had 6 days now of resistance up until yesterday, and yesterday we saw the price pull back quite sharply. So sharp, in fact, I also mentioned that it was actually going to go to roughly around the prior support in this case, or the resistance level. Apologies, if I'm going to draw straight line would be great. Yeah, at roughly just under the 14,3500 mark, and it actually surpassed that straight through it, continued all the way down to the next support and resistance level, resistance and support. Yeah, just above the 1420, if I'm not mistaken, 2200, 2300 mark as we're trading now. Asian market trading, very indecisive. Primarily this is going to come along at a support and resistance level. It's now trading below the 20 period moving average on this pair. So what has it done? Well, this pullback here yesterday that occurred actually broke this major uptrend. And now what we're doing is we're seeing it's trading below price, and it's trading below the moving average for that time frame. CTC, however, is still positive for this pair long term. And what it's done now, it's pulled as far back as prior resistance, a ceiling level, way back in November. So this was a very strong resistance level at one stage. Will it now be the supporting factor for this pair? If it falls further than that, then what we're seeing is very negative sentiment in the market, and we could see price reverting back down to its prior lows of 1400 to start with, the 50 period moving average. So it gives you an idea. So price has to be trading above this level going into the latter part of this week to give us confirmation that this was just a premature pullback, and we'll see another reattempt of 14,500 in the near future. Failure to do so, failure to break above the 20 period moving average would confirm that there's negativity creeping into the market, and we're going to see price continue to the downside. Yesterday's candle did bring a red arrow, but the CTC is still positive. Intraday, you can see that most of it, the majority of the intraday charts are going to show you red across the board, primarily the massive move that we saw yesterday. And if I put in the 14,500 as our ceiling level, you can see how steeply price dropped yesterday. This is on the 4 hour, so you can see how momentum really shifted to the downside. You can see at the moment now, after our hourly chart, yet again 1400, there we go, ceiling level, and price just fell away very quickly at one stage. It started off very subtle. Of course, of yesterday, sorry, the previous day, Friday, then going into Monday morning, and then as it broke the prior support and resistance level, support, breakout, pullback on the Asian time frame, it just literally gave way, and we've seen price trading at the moment now in a consolidation range, very strong hammer formation on an hourly chart around the 14,200 mark. And the ceiling level here again at roughly the 14,2400 mark. So it needs to be trading well above the 14,2400 mark in order to see a bullish sentiment creeping in, or it needs to be trading or closing lower than 14,200 to be looking for further downside movement. And I did mention that 14,200 long term is the very strong prior resistance, which would hopefully be the new support. And if I look at the 4 hour, for example, that 200, it's slightly higher than that. I'm just going for round figures, but you can see primarily there is resistance and support in these areas around the 14,200 mark. So, and the 200 period moving average isn't too far off from there. You can see a lot of consolidation on a 4 hour time frame, so be aware of that. So what we're looking for is a confirmation breakout, either to the upside, a very bullish one, or we're going to see further consolidation followed by a breakout to the downside. Why? Because the CTC is trading lower. We are trading negative. You can see that swing high on this occasion, but that's our prior support at this level here, and the CTC is negative. Notice it's trading below all the moving averages, even though it's consolidating here against a 20 period. CTC is still governing this trend, and this trend intraday for this pair is negative. Resistance, 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 resistance. Swing low, swing low, swing low, swing low, swing low. Swing lows dictate a downtrend. You only trade this to the upside when those swing lows have been broken and the prior swing low has been nullified. So it's got to be trading well above the 142400, 142,500 in order to see a definite change in market sentiment. The longer it goes sideways, the more likelihood is we're going to see price changing. But just remember, we should see price action later on this morning because the trend line will come into play. Next pair we're looking at is the US dollar against the sterling against US dollar, apologies. And yesterday we had the similar effect. You'll notice that 16,400 is another resistance level that's definitely in play. And the swing low that we saw, or the formation count that we saw on Friday, we've seen that play out quite well yesterday. Swing lows will confirm or dictate swings in the market, and you could see that yet again failure to break above 16,400 and close significantly above that area has caused price to revert to the downside, and doing so forming lower swings. If you have a lower swing, then obviously you're going to have attempts to the downside. Price yesterday during the course of the day fell dramatically, and then during the latter part of the trading session was able to pull back quite significantly. So quite a long range yesterday, and closing higher than the prior support area at this junction here at 16,2500, where price is trading well, as we speak on that level, and it's still trading above all the moving averages, but in a consolidation range to the downside. Lower swing from that is telling you momentum is driving slowly going to the downside. As long as it stays above this area here, then we could see another reattempt of highs. If not, a closed lower, it would definitely confirm further downside movement, and then we could look at 1600 being our target again. Why? Because we've been in the past. Once it's pulled back from 16400, it's always reversed back to the 1600 mark. So keep that in mind. Failure to find support at this key level here at 16,2500 by the end of trading today would signal further downside movement, and we should be looking for opportunities to the downside. Intraday, CTC long term is still positive because of that. So intraday, hourly, you can see, for example, that extension to the downside after reattempting the 16,400 mark. So that swing low after the highs, and you can see momentum is driving lower. It's trading below all the moving averages, and the CTC is positive, or negative across the board for further downside movement. So, as I mentioned, it's got to use the 16,2500 as a support area. 16,2500 is there, so price needs to be trading higher than that at the close of play today to confirm a possibility of further upside movement. If it's not, and it's closed at lower, then look for confirmation trades to the downside. You've got to watch out because of what this happens. This yesterday took a lot of people out the market. If you were reading the news, it was the downgrade of the S&P to negative. The Standard & Poor's 500 in the States was downgraded to negative, which is not great news to hear. And what happened was we saw the US dollar fall in value, so the euro gained a bit of strength but reverted to the downside yet again because momentum drove it, and the euro was able to the US dollar capitalized for a moment, and what we're seeing is this hiccup this massive volatility range that we saw on sterling and euro and most pairs, in fact, at midday or just after 3 p.m. GMT yesterday. So when you're trading the intraday one, just make sure that your 16,2500 mark is in, and make sure that price is trading above that area going into the close of play tonight. If it's doing so, then we're seeing a definite confirmation support area. You can see if I go on a 30-minute time frame how there has been a major support area of this in the past, and as long as it's trading above that, then we could likely see another upside movement. At the moment now, it's not faring well because the swing low is going into today, but if it can manage to stay above this area during the course of today, then obviously we could see potential upside movement. However, it's looking likely if we'll probably see some more downside movement, but we want a definite close below 16,2500 to confirm that. Next pair is the US dollar against Swiss franc. Here again, price is trading below a prior support area. You can see the CTC is still negative, momentum is still driving lower, and is trading below all the moving averages. What it's done though is it's failed to break higher than this price support area that we saw in early March, and failure to do so would see price still trading negative. It's trading at its all-time low for this pair. The US dollar is trading at an all-time low against the Swiss franc, and all it's doing in the past months is just been posting lower lows as we've moved forward. So if it fails to break higher than support level, then obviously this is going to be the new resistance level at 19.900, and then we should see price revert to the downside. So we could see consolidation today. Price, in order to be bullish, needs to break above the prior support area. Failure to do so, failure to trade higher than 0.900 is still classified as negative intraday, and we should be looking for opportunities for shorting opportunities going forward. So intraday, you can see that we're in a consolidation band, not a very attractive one, and I mentioned price needed to close higher than the previous swing yesterday on yesterday's analysis, and it attempted to this morning. Sorry, it attempted to yesterday, apologies, but failed to do so, close higher. We saw a massive trading range yesterday. This was the influence of the S&P 500 being downgraded, but significant news wasn't able to continue with that momentum, and we saw price reverting to the downside. And now what's happening is we're literally trading within a range. So ideally you need to be trading well above 0.900 to definitely give us confirmation of an upside movement, or look for price to be trading lower and closing lower than 0.892 to give us confirmation of further selling for this pair. Last pair of the day is US dollar against Japanese yen, and you'll notice the massive pullback that we've seen on the US dollar against its counterpart. I did mention that a number of days ago the price needed to stay above the 200 period moving average because it was the first time the pair had been trading above the 200 period moving average in a long time, and by breaking out and pulling back and hopefully finding support at the 83.50 mark, then it was confirming just a pullback and a confirmation. We could see a confirmation further drive to the upside after that, because whatever you see is breakouts, pullbacks, and continuations in the direction of the way the trend's moving. But we saw a break and close lower a number of days ago. It failed to find support as I was hoping it would, especially after the intervention by the Japanese government and a lot of the G7 countries, but it failed to materialize, and what we're seeing is price trading below all the moving averages now, which is a negative signal. You can see how strong that pullback has been. That sentiment is very, very negative. We come from some extreme highs we haven't seen in a number of months, and we've gone straight through them all again. And what's happened is we're trading even lower this morning on the Japanese and the going into the European session open later. So CTC on a daily time frame is negative because of that. We wanted price to find support at 83.50, because by trading above all the moving averages and finding support on a 200 period moving average would just have confirmed a bullishness to the upside, and by not closing higher than 83.50 or the 200 2 days ago, that's meant that the negative sentiment that we've seen on this pair for a number of months is still in effect. So we should still be looking for downside movement intraday. So that's mask. I mean, if you're trading this on a bigger time frame, the Japanese US dollar against Japanese yen has been great for trend trading. You could see nice swing lows in direction. If you go far back, and we saw the upside movement after the intervention. Beautiful swing highs, swing high, swing high, swing high. Beautiful trading on a bigger time frame. And what's happening now is you can see prices reverted to the downside. It's trading below all the moving averages, which is negative. The CTC is in our favor. Ideally, the good point of the two is the 200 period moving average has been breached just recently, and we're now trading at a support level for this pair. So confirmation break lower than at least the 82. 82, 1, 2, 3, 4. Yeah, the 82.40 mark closes lower than that going into the latter part of this US trading. We're just going to see further downside movement for this pair. If I go to the 30 minute, for example, you can see the consolidation that's taken place, which we saw on the 4 hour. If you took this down here, or the swings over here, 82.35 is entirely your choice, but you can definitely see a support level at the 82.35 mark. Notice how this pair, the 50 period moving average in particular, has been acting as a ceiling level. 200 is well evenly spaced out, confirming a negative strong downtrend. And the more I zoom out, you can see that strong negative downtrend. Very strong. And points of pullbacks, but the negative on the long term, if you're trading bigger time frames, is confirming negativity is still in this pair, and we're trading lower, swing lows across the board. So a close lower than 82.30 would definitely confirm further downside movement for this pair, and we should be looking for nothing more than further shorting opportunities. That's it for today, guys. I hope this analysis has been really helpful in your analysis for today. Make sure that the CTC is in your favor before placing any trades. Get the confirmation drive. Look at the bigger picture, guys, to see where market sentiment has been and how it's unfolded over the last couple of weeks. We don't want to be trading against the trend, so if we can trade in the direction of the momentum, then it's great, because then we're just going to be picking up on the momentum, and that's what we want to be trading, the momentum. Make sure your money management is in play, and you're following the rules when it comes to that. We don't want to be trading an adverse risk to reward, and most importantly, keep your trading simple. Enjoy your trading, and most importantly, trade serenely.